On how to use RSI for like determining overbought or oversold in stocks. So this is what the RSI indicator looks like for me. You have at the top 70 generally indicating overbought, and then 30 indicating oversold. And to me, that's how I use the indicator. So below 30, you want to look at buying, consider buying, and then above 70, you want to consider, is this thing oversold? How strong is the move? And so for instance, you'd see right here, if you just look in the short term, which I don't think RSI is as good in the short term, but it does work sometimes, then you can see we got a little bit oversold, and you can also tell, like, if you've been following some of my patterns, that's a good reversal pattern, and so that'd be a good time to get in. And then this trend has, if you're looking at RSI, you would say a okay likelihood to continue because we're not reaching into the overbought area, and it's just smooth all the way up. And then so up here, you'd maybe want to look at exiting. Now, it ended up going, but if you're just using the RSI indicator, that's what you'd look at. And then maybe, I mean, you haven't really seen the trend break down, but that's what you'd want to consider. And so then it gets overbought, drops back down for a little bit. Mainly when it's good for is, so if you have a little trend, like from here to here though, where it's going, it's really not great to use it in the middle of something, like in the middle of just trading, like right here where it's not obvious there's about to be like a change. Like, you want to use it in the beginning of the trend, if that makes sense. So like when there's been strong buying going on, like you would want to look here probably to exit. You're thinking that this may be the end of the trend, and then as you can see, it just consolidated, and so the RSI, I would say, maybe did help you out there, and so that would let you play from this move to this move, and it can indicate pretty well when a trend is ending. So like, or when would be a good time to buy, it's oversold, so other people would buy and make the trend in. Like we have this little downtrend right here, dip below in the oversold territory, then it goes up, doesn't quite get overbought, and then right around here it starts getting overbought, and you can tell the stock really slows down and consolidates up there when it got in the overbought territory. Gets overbought here for a little bit and goes down, just in the middle of RSI, and we finish up the day not quite overbought, but very, very close to it. And you can kind of see when we do get overbought a little bit, did the same thing. It just consolidated and then kind of slowly sold off, and you never got oversold. But what is the RSI really good for? It's generally good for determining, I would say, longer term trends. So you go out, oh well, anyone should have been able to tell. The RSI shows you that was overbought, and it should have been pretty obvious that was overbought. But there's a good example of it working. Reaches way overbought, and of course it comes back down below it, back to the area where it started off on the indicator. Alright, but what it's good for is usually in trends like this. So you obviously, the SPY is trending down. Like I said, it's good for spotting a trend change. So it's going down, and this is on the 1 month daily, by the way. Then you can finally see it dips below RSI. Then we have a place where the RSI reverses, and that is where the index reverses. That would have perfectly, that dip and that V shape in the RSI predicted a really strong move in the index. And then now we're starting to go back up towards into, well, we have a really strong move up. We're getting towards being overbought, but I wouldn't say we're overbought yet. If this thing goes sideways for like a day or two, then that RSI will go back down. But it predicted that dip, the change in the trend right there. And let's see, yeah, so if you go to right here, you can see it predicted a little bitty bounce right there. And so if you would have bought on the day where it was oversold down at the bottom, you'd have made profit once again. And that's really what it's good at, is I would say long-term things and looking for reversals in the long-term trends. Like here, you got a bounce when RSI was oversold, and here it was way oversold, and you got a really big bounce. And I would assume, well, I know it'll be the same on this. So you had a little bounce there, same thing, bounce there, and so that's all you're doing with RSI. Is you're looking for if it gets above 70, it's overbought, high chance that it's going to cool down, and below 30, it's oversold. Now, you will see little bounces, but don't be fooled like, I assume this did this today. Netflix. Okay, so yeah, like at the open right there, it showed that we were oversold, and it bounced a little bit, but then it kept going down. Okay, so like Netflix had really bad news after the earnings release. So if there's news or something like that, then it can predict a little bit of a bounce. But I mean, you would very much be on guard looking for Netflix to continue down. Where it's really good for is spotting the long-term trends, like and on the major indices, it would be even more smooth, like it did with the SPY reversal and the DIA reversal. And so that's pretty much RSI. It's pretty simple. Above 70, overbought, such as right there. You get that nice little TA here supporting. You get that nice little double top, where it's overbought on the RSI, and then it comes back down. And of course, that is right near the top of those 5-minute candles where you had that rebound from earlier in the day. So yeah, RSI, really basic indicator. Really easy to use in my sense, mainly a long-term thing, but you can use it intraday if you're worried about a stock being overbought or is the stock oversold, and it's one of the many tools that can help you. So anyway, I hope that video helped. Try to keep it short, and if you have any questions, as always, please ask.